Catalyst alert, lithium prices soar after cattle halts mine operations. Cattle, the world's largest lithium ion battery manufacturer, has temporarily suspended operations at its mine in Jiangxi province due to environmental concerns. This sudden halt has sent shockwaves through the market, causing lithium prices to surge as investors scramble for alternative supplies. The catalyst behind this price jump is the mine's significant contribution to global lithium production. According to a recent report by Benchmark Mineral Intelligence, Cattle's mine accounted for around 15% of China's total lithium carbonate production in 2022. The halt in operations will undoubtedly lead to supply chain disruptions, exacerbating existing concerns over lithium availability. Market data points to a severe shortage of high quality lithium materials. A study by the International Energy Agency, IEA, found that global lithium demand is expected to grow by 20% annually until 2030, driven primarily by the expansion of electric vehicle production. With Cattle's mine closure adding pressure to already tight supply, prices are likely to remain elevated in the short term. The market's reaction to this news has been swift and decisive. Lithium carbonate prices on the Shanghai exchange have jumped by over 10% since the announcement, while prices for other lithium compounds have also seen significant increases. This price surge is not limited to China. International markets are also experiencing a sharp rise in lithium prices due to increased demand from major battery manufacturers. According to data from S&P Global Market Intelligence, lithium carbonate prices have reached $23.50 per kilogram on the Shanghai exchange, up from $21.25 just last week. This price hike will undoubtedly have far reaching implications for battery manufacturers and electric vehicle producers worldwide. The immediate risks and uncertainties surrounding this situation include further supply chain disruptions, potential delays in new project developments, and ongoing environmental concerns at CATL's mine. However, one possible scenario is that other producers will step up to fill the supply gap, potentially alleviating some of the pressure on prices. As investors navigate these uncertain waters, several tactical ideas come into play. Short term traders may look to profit from the price surge by targeting entry points around $20, $22 per kilogram for lithium carbonates. Medium term investors may consider allocating funds towards companies with diversified supply chains or those that are actively developing new sources of high quality lithium. Some notable players in this space include Albemarle, which has a significant presence in Chile's Atacama Desert, one of the world's premier lithium producing regions. Another contender is Ganfeng Lithium, China's largest lithium producer by capacity, which has been expanding its operations to meet growing demand from battery manufacturers. In conclusion, the sudden halt in CATL's mine operations has sent shockwaves through the market, leading to a sharp increase in lithium prices. With the global demand for high quality lithium materials set to continue its upward trajectory, investors must remain vigilant and adapt to changing market conditions. As the situation unfolds, one thing is clear: the lithium market will be closely watched in the coming weeks and months as investors, policymakers, and producers navigate this complex and rapidly evolving landscape.